Hello, I'm Kamal Santamaria, and this is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, Libra. On balance, it sounds like a solid idea, a new world currency to challenge the dollar. Given it's backed by Facebook, well, it's just not that simple. We will look at the challenges the social network faces from governments, central banks, and data campaigners. Also this week, the currency war within the trade war. China lets the yuan depreciate as Donald Trump slaps Beijing with the title of currency manipulator, while Brexit also takes another lump out of the pound. And going electric on two wheels, is this the transport to reduce Berlin's carbon footprint? What's the most valuable commodity in the world? Well, for the past 100 years, the answer to that question would have been oil, or maybe increasingly, water. But with the likes of Amazon, Google's parent company, Alphabet, and Facebook becoming the world's most valuable listed companies, big data is now king. The rise has been rapid, leaving regulators scrambling to keep up with the changing environment. And now, one of those protagonists wants to write another chapter. Facebook, hoping to introduce a digital currency called Libra. Perhaps not surprising in the age of Bitcoin, but given Facebook has abused the data it has on billions of people and has failed to curtail the spread of online hate and generally has become a byword for distrust, well, many in policy circles are opposing the new cryptocurrency because it's also a threat to national economies. A Facebook currency used by its 2 billion users could effectively create a new world currency, a rival for the dollar maybe, or the yen or the euro. And the loss of sovereignty is a huge concern for the likes of France's finance minister, Bruno Le Maire. In an interview with CNBC, he said, quote, "We cannot accept a new currency having the exact same kind of power without the same kind of rules, without the same kind of commitments, and without the same kind of obligations." And even US Treasury Secretary Steve Mnuchin has raised the issue of money laundering and funding of terrorism. Nations are already struggling to get Silicon Valley to pay its fair share of taxes too. But as social ad growth slows, Facebook is now keen to tap into other areas. You know, revenues from global payments, that is, remittances, electronic transfers, all those sorts of things, they will exceed $3 trillion every year by the year 2022, according to McKinsey. Already, person-to-person payments in China have topped more than $17 trillion. This is when you use an app or an online service to transfer money. And although Facebook will own only 1% of the new currency Libra, tapping into the global payments market will make it very, very rich. With us now, Naeem Aslam, who is the Chief Markets Analyst with Think Markets. And Naeem, it's great to have you with us. I think just before we get into the real details, let's deal with the basics, the difference between the likes of Libra and, say, Bitcoin, which most people are, well, a little more familiar with.
Libra is going to be the first major cryptocurrency which will be introduced by one major corporate or enterprise, whereas Bitcoin has not been introduced by any enterprise or any government. It's not controlled by anyone. There's no governing body behind Bitcoin. It is completely decentralized and it is driven by the community. And price and everything with that respect is completely determined by the user, i.e. the supply is very much fixed anyway. The only element which moves the price is the demand.
One of the most important things you mentioned there on the Bitcoin side of things is that there's no regulation, and that's, I guess, what people, or the fans of Bitcoin, like about it. There's never going to be a way to properly regulate this, is there?
Like it's not controlled by governments, and governments do not, or by any bank or a central bank. It is a completely decentralized solution for the community, for the users, and of course, governments cannot clamp down. We all know they've tried their best to regulate it, but everyone just completely failed to do that.
Well, that's the thing. France's finance minister has recently brought up this issue and talked about sovereignty. What does he actually mean by that? And again, is that just, well, fanciful in the idea of cryptocurrencies as you've just described them?
Now, look, the issue of Libra, it's been pumped so much and it got so much attention because all the central bankers, they know one particular element, that we weren't able to regulate or control Bitcoin, and we don't want the same thing happen with Libra, which is a cryptocurrency by the biggest social network. And they already know that they're finding it incredibly difficult to find regulations which can really surround their social media now, because they know Bitcoin has become a major success and it poses a major threat to central bankers, the way that they regulate monetary policy, or the way that they regulate other aspects of the political system. So they don't want another version of a major Bitcoin coming into the market, and then that means they will lose the control over whatever they have with that respect.
This is perhaps more a sort of social commentary question, but the fact that it is Facebook, you made the point there, this massive social network, 2 billion users, the fact that it is Facebook behind this, is that what's got people worried? The fact that people feel Facebook can't be trusted anymore because of what it's done with users' data in the past?
So when we say people, let's just be very clear. These people that we're really talking about, they are regulators, right? And yes, they are concerned about this one, that they cannot control, because the news media, or the way that we see news these days, is not the same as it used to be back in old days. Now it is more open. And it's more transparent. There's more element of being real and then telling the truth. And there's less censorship in this one. And I think regulators wanted to make sure that, yes, that the money laundering systems and everything else stays well in place. But here is the fact. Dollar is the biggest currency when it comes to money laundering. And there's no doubt about that. And then you can't even trace those transactions. But when it comes to anything on a blockchain or on with respect to cryptography, such as Bitcoin, everything is very much traceable. You know where the transaction happened. If you really wanted to clamp it down, you can certainly clamp it down, everything, whatever you want. So to answer your question precisely, yes, they are concerned. Regulators are concerned that, okay, if Facebook is coming up with their cryptocurrency, it is a major threat for the ecosystem.
Just a bit more on the backers, if you like, of Libra. Yes, Facebook is the name there, but there's this 100-member panel there as well, which has the likes of Visa on board. I guess that's understandable. But then you've got the likes of, the ride-sharing apps, the Ubers and the Lyfts, for example. What do they bring to the table as far as currency and banking goes?
Yes, look, when it comes to the narrative of cryptocurrency, is about adaptability, it's about usability of these particular functions becomes very important. And this is why Facebook doesn't really want, okay, we just have this particular area and then this is where it's going to be accepted. No, they want every single person, all the different enterprises, to be part of the network. So it's just like when I have dollar, when I have pound, I can go anywhere and then I can use it. They wanted to have the same concept. They wanted to build the entire ecosystem around it.
And isn't that a good concept in a way? We're going to be talking about currencies later on this program, particularly to do with China, the yuan and the pound as well, and the US dollar as well. The fact that there is all this volatility and that politics plays such a role in all of that. This idea, at least, of a global currency which might be easier to use through Facebook, on the face of it, maybe it is a good idea.
Look, innovation is always important for our ecosystem. It always helps to make things more efficient. So yes, it is of significant importance that we should see these kind of innovative ideas, these new innovative technologies and currencies emerging. But yes, there shouldn't be wild west when it comes to them. They should adhere to some regulation, make the entire regulatory framework even more better, rather than just going in a completely Lulu land and then everything just kind of starts to blow up.
Naeem Aslam, it's a pleasure talking to you about this. Thank you so much for your time.
Thank you.
Now, in the tit-for-tat trade war between China and the United States, Beijing may have landed a blow that even President Trump will find hard to counter. After Trump threatened to slap tariffs on $300 billion of its goods, China let the market forces loose on its currency, leading Washington to label Beijing a currency manipulator. Scott Heidler has more from Beijing on what that means for the world's second largest economy.
A new battleground in the intensifying trade war between the world's two largest economies, currency valuation. The Chinese government eased its control over the yuan, allowing the currency to surpass the 7 per US dollar level for the first time in more than a decade. That prompted the US Treasury Department to designate China as a currency manipulator, something it hasn't done in 25 years. With the yuan worth less, Chinese exports become cheaper, allowing to compete better in the US and across the world, partly offsetting the US tariffs imposed on Chinese imports. But it will come at a cost to Chinese consumers. They will pay more for imports. China's central bank is denying the US accusation, saying it's a protectionist practice. Some economists think China allowing more yuan volatility can only go so far.
China is trying to say that we're not going to be bullied by the U.S. and a small reminder to the escalation of the trade war and what China can do. But a further escalation for China to use exchange rate as a weapon is highly unlikely because when it drops to, say, 7.5 or 8, then it becomes a political issue.
After share prices worldwide fell in reaction to China's move, some experts say the view inside China is not as pessimistic and a weaker yuan was expected at some point.
In the past, the U.S. has been hesitant with the currency manipulator label over concern that it could trigger a trade war, but we're already in one, so the consequences are lower. And the negotiations with the International Monetary Fund could take up to a year.
And some feel that the IMF won't act against China despite the U.S. accusation of manipulation.
When he starts mentioning the IMF, the question is, what could he do there? The IMF is a consensual organization. They're not going to take sides. In fact, 2 weeks ago, they already issued their own statement about China's currency, and they said that it is in line with international standards.
Despite the arguments, the U.S. says it's still planning for a visit from a Chinese trade delegation in September.
No one better placed to talk about all things currency than Viraj Patel. He's joining us now, FX and global macro strategist at ICARA. Good to have you with us. Let's just deal with the very basic, simple situation first about currency manipulation. It is an easy name, I guess, to label the Chinese with. In your view, are they currency manipulators?
I think if it's a technical question and a logical question, then no. If it's a literal sense of Chinese officials actually intervening and work in the currency markets, then yes, they are. And but it's more nuanced than just labeling a country of China's size a currency manipulator. I think the US have to sort of take a step back and realize sort of why and the history of sort of Chinese currency. And, yes, one could argue, and the IMF have said this as well, that a country of China's size should not be having a managed currency or managed interest rate system. They should be a fully flexible system. But the approach from the US is completely wrong, right? As soon as you apply tariffs, as soon as you take a sort of more aggressive stance on China, they become defensive. And I think, it just, it sort of is counterproductive to China and Beijing's sort of 2025 vision of opening and liberalizing the currency.
So it really becomes a political call then, because actually, didn't the US Treasury report just a few months ago say that, well, by its standards, no, China wasn't a currency manipulator?
Exactly. So from a technical perspective and, even based on US law, the latest 2015 Act was nowhere near sort of labeling China a currency manipulator. The US had to dig out some really old trade law here, going back to 1998, using some of the similar laws that were applied when China was first named a currency manipulator back in the early 90s. So, look, I think, this is more of a political statement. The scariest signal for us from this is actually the fact that the US administration and both the US Treasury are willing to sort of bend the rules here to make a political statement. The question for us is, how far are they willing to bend the rules and what could come next?
This is, of course, part of and this is a slight pivot, but it's part of a wider trade war, which we know about between Beijing and the United States. When something is described as a war, that implies there would be a winner and a loser. I'm suspecting the more these tariffs are going on either side, and then China saying we're not going to be part of US agricultural imports either. Can anyone win a war like this?
The unintended consequences of this war, and the longer it goes on, could be quite damaging, both for sort of risky assets and equity markets. And I think it's fair to say that, at some point, someone has to yield, but there's just no end in sight here.
Yeah, so any thoughts then on what might come next, either trade-wise or currency-wise, or actually is it a fool's game trying to predict this?
Yeah, I think, the latter's pretty much the sense here. Trying to get into the mind of the US administration is always unpredictable. Look, we've got the tariffs potentially coming through on September the 1st. There's always this sort of threat of US FX intervention to counter the Chinese sort of currency manipulation claims. We put those risks as lukewarm, but, these are policies that 12 to 18 months ago we thought were unthinkable. And now we're sort of having to counter and think about them. For us, it's, as long as these threats remain on the table, it's going to be a pretty volatile, non-benign scenario for global markets.
If here's a scenario, excuse me, that Donald Trump were to intervene, or the United States were to intervene in the currency markets, how do you think that might play out?
So it really depends on the firepower that the US have, right? So on its own, if the Treasury were to intervene without the Federal Reserve, then we put it as a zero effect sort of impact. You think about the $4 trillion daily turnover in global FX markets, the US have barely sort of 80 billion worth of capital to play with here. So, on its own, no chance of having more than a signaling effect and sort of curbing the top of the dollar. With the backing of the Federal Reserve, they may have greater sort of impact on dollar markets. If you think about the Fed sort of buying more assets and sort of a new fresh round of quantitative easing, but then we're in the realm of losing in terms of political and US institution credibility here. So there's always going to be a cost to any sort of extreme policy like this, whether it's economics or politics. But either way, it just seems as if one of those sort of illogical and irrational moves from the US, but we've been used to seeing some of these illogical and irrational moves over the past 12 months.
Just a quick thought, Viraj, on your neck of the woods in London. Obviously, Brexit is looming, the pound is falling. Your broad thoughts on the state of the currency there and what's next?
Yeah, there doesn't really seem to be much love for the pound right now in the international markets. I think, when we look at sterling's move, there is a strong game going on in currency markets of guessing what the right probability for a no-deal Brexit is come 31st of October. So we look at betting markets, they put it around 35%. We look at sort of the currency markets that we back out, we think it's around 50% or 50-50 based on positioning. So a lot of negativity is priced in. It makes me nervous when the market's so one-sided to add to fresh sort of sterling shorts from here. I can't blame the market for sort of being pessimistic on the outlook for UK politics. Again, no end in sight. But it makes me very nervous in chasing sort of cable lower when you've had such a momentum and sentiment-driven move. Historically, when the currency is trading at this disconnect from fundamentals, there's always a bounce back. And maybe we're seeing a bit of stabilization now. We're waiting really for the next move, either from the EU or the Boris Johnson cabinet when it comes to the Brexit talks.
This requires maybe a little bit of opinion on your part, but do you think there's a chance that some of this is deliberate, letting the pound actually fall?
Yeah, I think I misread sort of what the sort of Johnson tactic would be post coming into power. My thesis was that maybe they'd be running over to the EU and trying to sort of get a deal and shore up sort of markets. Maybe this is a game of chicken and egg, right? Who's going to blink first? Whether it's going to be the UK or EU. Our baseline view is that really, the odds of a WTO trading terms coming through in 1st of November seem much less than what the market is discounting right now. I think the political cost of moving to that regime would be too high for either side of the UK or the EU. So, whether it's a last-minute save-the-day deal or something to kick the can down the road, maybe that's where things are going here. But even then, sterling investors won't find much joy, because what comes next for UK politics? Do we get a general election? Do we get more sort of uncertainty? There just doesn't seem to be a majority view on what happens come the end of the year when it comes to UK politics.
Plenty to keep you busy then. Viraj Patel, thank you for joining us. Living on the slopes of the most active volcano in Indonesia obviously has its dangers. 275 people, in fact, were killed when Mount Merapi erupted 9 years ago. Since then, survivors have returned to their villages and farms. And as Florence Louis found out, some have found new ways to make a living.
When the weekend arrives, so do the tourists. Hundreds of them by the busload. Then they pile into off-road trucks and head off, bumping along dusty trails for a close encounter with Indonesia's most active volcano. The alert level for Mount Merapi is now low. It's 9 years since the last major eruption. Tourists are allowed to go into the danger zone, as close as 4 kilometers from the crater. Agus Sudarmanto used to be a cattle farmer, but turned to off-road driving after his neighbor persuaded him to give it a go.
Whenever there's been an eruption, tourists are a bit weary and stay away, but they come back when the government says it's safe. The volcano is dangerous, of course, but there are also benefits.
He sold some of his cows to buy his first utility vehicle. Now he has 3.
This tour has become so popular that there are now about 900 jeeps that cater to visitors. The highlight is this, driving through a river of rocks and sand where lava from the 2010 eruption flowed.
It's not just nature and the spectacular views that attract the tourists. This museum of sorts is a testament to the power of Merapi. A collection of household items destroyed in the eruption in 2010 that killed 275 people. Endang is on her second visit to Merapi.
I was very happy and excited my first time here. But this trip I feel a bit sad thinking about the people who died. But it's a good tour. It educates people, especially for people who live in disaster-prone areas. They know how devastating such occurrences can be.
Asi knows just how deadly Merapi can be. He's the volcano's spiritual guardian, a traditional role going back generations. He succeeded his father, who was killed in the eruption 9 years ago. People still come to pay their respects to him.
Farmers take grass from Merapi. We take rocks and sand to build houses. We need to love Merapi. It's terrifying when it explodes, but when it calms down, we need to come back and take care of it.
The people of Merapi know they live in the shadow of danger, but have learned to adapt and even benefit from it.
Now, if you live in a big urban city, you've probably noticed the increase in use of electric scooters in the past year or so. They don't come without controversy. There are accidents, there's the harassment felt by pedestrians, but the overarching theory is that this kind of tech can help our move away from the conventional internal combustion engine. Now, in Berlin, for example, authorities have approved the latest venture, a sharing scheme for e-scooters, which will augment existing electric-powered mopeds. Can it help reduce the carbon footprint of the German capital? From Berlin, Dominic Kane reports.
This is the latest legal way to travel around Berlin, the e-scooter, which uses no fossil fuels and leaves a very small carbon footprint. But so far, there are relatively few in the German capital. Instead, there are lots of these. Electric mopeds, which can reach from 45 to 50 kilometers per hour and which can be hired on the spot for as long as you like, and which increasing numbers of Berliners are using to move around. People like Christoph Heiser. He's an engineer living in the Friedrichshain area of the city. For him, having a vehicle he can use at the touch of an app is very convenient. He showed me how it works.
And the scooter is there, next to the Forkenbeckplatz, and I'm here, so it's just 2 minutes walk, 3 minutes walk.
Once at the bike, the principle is relatively simple, but what's the whole experience like in practice?
There's maybe 1 or 2 negative points, so that one point is you just have one helmet, so other companies, they have 2 helmets, so if you drive with a second people, you need a second helmet, and then it's a problem if you just have one helmet. And the area where you can use it, it's limited, so it would be good if the area would be bigger, but all in all, it's really a cool thing.
For the firm running this service, the green dividend is key.
Yeah, so we really take care about offering sustainable service. We charge our batteries with green energy. And basically our customers don't need to worry about charging the scooters because we do the job for them. And we charge the batteries internally and then drive to each and every scooter with a low battery level and then exchange the battery with full batteries.
For the moment, these bikes are still a niche market, but it's pretty clear that the companies concerned have major expansion plans, and they see bikes like these as their contribution to the overall fight against climate change. Dominic Kane, Al Jazeera, Berlin.
And that is our show for this week, but we'd love to hear from you. You can tweet or message me directly. I'm at KamalAJE. The hashtag is AJCTC as well. Or you can drop us an email. Counting the cost at aljazeera.net is the address. And there is more for you online as well. aljazeera.com/CTC takes you straight to our homepage with individual reports, links and entire episodes for you to catch up on. But that is it for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.